A very good evening to all the investors gathered here for today's event. We have with us our founder, Dr. Mohit Batra, who has handpicked 5 stocks that deserve your attention. Find out the names and most importantly, the selection process behind them. Towards the end, we'd also be having a Q&A session. Over to you, Dr. Mohit.
Thanks a lot, Jason. A very good evening to all of you. I sincerely want to apologize for yesterday. There was a YouTube glitch. We tried really hard till around 7:30 to resolve it, and then we had to call off the event. Sincere apologies for that. We are now doing a backup of Zoom along with YouTube, so that if YouTube is down, then we can, obviously shift to the Zoom platform. So hopefully this glitch will not get repeated again. With that note, let's start today's proceedings. Very exciting day for me personally. One of the things that we have to do as an organization is to be in front of you, to be present in front of you. And we do this almost 5 to 6 days a week. And we've been doing this for around 5 to 6 years now almost. And in that, sometimes we believe that doing the same set of format of presentations that we keep doing or looking at the data in a very specific way, week on week, gives us analysis paralysis in our own minds because we are presenting the same set of data, we're looking at the same set of data. So this time what I did was I looked at something very different, a different angle to looking at how stocks are. Now let me just rewind back a little and tell you what are the strengths of our IP and what are the weaknesses of our IP. So if you look at the strengths, obviously the first and foremost strength is that we cover every single listed company in India and now across 29 global markets. I don't know if you all know that we cover around 93% of globally listed companies under our research on a real-time basis. So that's the strength number one, which is the coverage is almost 100% across all markets that we deal in. The second strength is that we remove the human bias. So typically in the investing in the equity research world, the analyst or the research guys, they become very sector biased because they've been looking at a certain sector for 20, 25, 30 years. And most of the time, the only way to look at that sector, even if you're looking at short term or long term, is that you're always a bull. You look at, buying a sector today, then you look at stocks. Even if the sector doesn't look good, you change your tonology to saying that the sector looks good on the longer run and you're still a buy. So that's the benefit number two, which is removing the human bias. The third is the worldwide incentive plan on institutional sales and retail sales is made in a way where sell calls are never given. You're always giving a buy call, right? You never, outside of your sectors that you're looking at, you would never give a sell call because nobody's going to pick up a sell call and sell that to the investors, right? So you always give a buy call. So there is a buy bias that seeps in, and obviously the second drawback comes in, which is then you don't want to sell that because you feel that you're long on the sector or on the stock, and even if the stock tumbles out there, your bias of the sector comes in. So that's the third benefit that we have. The fourth is obviously once we believe in data science. So, our whole hypothesis of fundamental research is that sooner or later the price follows the fundamental. And we've been following that approach for the last 10 years. And, we've been, I would say, fairly successful in looking at decent stocks that follow fundamentals. Even if they don't today, on the longer run they would, because you're obviously invested always in the fundamentally strong stocks. Now, having said that, one big weakness, now let's go on to the weakness side, right? The weakness side is the forward-looking trends. Sometimes we are not able to capture because we work on declared data. We are a data science firm. We will look at declared data and then our own analysis will go on the declared data. When you're looking at declared data, you can get into the fallacy of always looking at the rear view, primarily because you're looking at declared data. Having said that, your assumption is that sooner or later the price will come to the data, but you do miss some future trends. You do miss some forward outlook on certain sectors, on certain stocks, which can play around and which can maybe reduce your success rate to that extent. So that whole piece, a lot of you over the last years have told us how can we futuristic looking. And my call on that is that if you are a data firm and if you are a data science firm and you're following that, as soon as you mix some kind of forward judgmental approach to it, you're then running a very hybrid approach. And that hybrid approach again is as long lived as the analyst who's working with you. There is very less that we've seen that can go into the data, which can give you a solid forward-looking approach. When I was doing this research on this particular presentation, I got a very, very clear trend that comes in. And today I want to share that trend with you. I'm also going to talk about 5 stocks that are coming in that particular trend. Before you take a call on any of these stocks, I would tell you to wait for a week, because what I'm going to do is I'm going to rethrash this whole approach and give you the pre-stage of all the strategies. Now, I know I'm confusing you with this, but as I go through my presentation and the website and show you these particular stocks and the rationale behind that, you will get what I'm talking. So without any further delay, let's get onto the presentation. I'm going to be juggling it between the presentation and the website to show you certain data points which kind of look at the hypothesis that we're taking out here. And then, as I told you, that next week I will tell you what we're doing, which can be pretty magical if we are able to catch that trend. And if we are able to catch that particular trend, which I'll come to know by the end of this particular week, and I'll present to you next week, then I think we are onto something very big, if we are able to do that. Yeah. So with that note, let's get on to the disclaimer. Though obviously the webinar's content is for information and educational purposes only. It is not investment advice or recommendation to buy, sell, or hold any financial product or security. Always conduct your own research and consult certified experts before investing. All investments carry risk, including potential loss of principal. Past performance does not guarantee future returns. Equity investments involve high market risk. Invest only if you can bear these risks. And organizers are not responsible for investment actions taken basis this webinar. Now, before I proceed on, because of Christmas, we were running these 3 offers. I have an announcement that we've got an overwhelming response for the US 5-year offer only. We are ending that today. We've never done this here, which we wanted to do to just show that US becomes a part of the India plan. In this particular plan, what you're getting is for 19,999, you are getting 1 year of US plus 4 free years. So this means that 19,999 becomes an offer for 5 years of full access to US only. You could have, as you know, you can buy this plan multiple times to have a long-term subscription with us, but this particular plan will end today. We had done this for only 3-4 days, and I think we've got a huge response, and we want to close this because this is a very, very low offer that we had given with a 4-year free access, a total of 5 years in 19,999. The other 2 offers which are also coming up for close is India plus US. You're getting 1 year at 19,999 plus 2 years free only for this webinar attendees. This is the all of India and US, which means that the whole of Mojo 1 plus stock of the week plus US, you're getting 2 years free in this particular offer. This offer also is closing in for an ending, which is 19,999. Get 1 year of India and US plus 2 years get completely free. And the third link is only for India, which is 14,999 for 1 year, but you're getting, because of Christmas, because of this particular year end, we are giving you 2 years free of Mojo 1 plus stock of the week, which is a huge 86% discount. So 3 years for 14,999. This is one of the lowest offers that we did during COVID times, and we are finally coming to an end to this as well. So if you want to, these links are available down below the webinar video that you're seeing. You can extend directly from there. All these three offers are exclusive for webinar attendees. These offers are not available on the website. So only if you are on this particular webinar, you can avail of this particular offer. Please make sure that if you have to, you do it now, especially the US only offer, which would typically end tonight. Right. Now here is the discovery. So, as you know, if you are all seasoned Mojo One professional users, we have 4 strategies through which we identify certain stocks which are in a certain phase. The phases are turnaround, momentum phase, reliability phase, and top phase, which is the Mojo One, which is the Mojo stocks. So turnaround, then momentum, then reliable, and then Mojo stocks. These are 4 products. You may be looking at these 4 products as 4 different products, but there are certain stages that they mirror, which are the stages that is there in the evolution of a company, which is a listed company, and the evolution of the market. Today we are going to understand what are these 4 stages. Turnaround obviously is recovery from distress, and I'm going to take examples of some turnaround companies today and how they are doing and how and when we identified those as turnaround companies. Once the company has recovered from a distress, there's 2 paths that it can do. It can either gain certain momentum and then again go into fundamental distress. That's a risk that we take on turnaround companies. The second is that if it maintains a positive momentum or fundamental momentum quarter on quarter, then you typically see that stock coming into a fundamental and price momentum. Now, once that stock or that company comes into the price and fundamental momentum, it can remain there for a little bit of a time, and there may be a chance that it then becomes a pillar of reliability, that you can now rely on that company with a longish fundamental positive trend, and it comes into the next basket, which is the reliable stocks basket. Over a period of time, when the stock remains in the reliability basket and when it is there as a reliable stocks, it goes back and it improves that one dot that we've got, which is the quality parameter or 5-year fundamental parameter. It kind of does a back cascading effect on the quality parameter and uplifts that, and only then it can go onto the Mojo stock. Your loved stock, your loved, stock list out here is the Mojo stocks. But having said that, that also is at the last value chain of trying to figure out the returns on that stock. The stock has already done a journey from turnaround to a momentum to a reliable to then coming on to Mojo stocks. Does every company go through this cycle? Answer is no. If you remove the turnaround cycle, most of the companies go through the next 3 cycles, which is the company comes into momentum, the company then becomes reliable, and the company then becomes a Mojo stock. So if I were to look at the stocks that can become tomorrow's Mojo stock, stocks that can become tomorrow's reliable, the stocks that can have momentum tomorrow, then I think we would have done a mile worth of improvement on our IP. And when I say mile, that sounds small to you. To us, it's very big, because our journey has been inches over a period of last 10 years, because it's very difficult to cover every stock and still deliver a very decent success rate from buys to sells in that particular order. So now if you look at, let's just go through these stages, right? The turnaround stocks, very high risk profile. They are facing operational challenges. Ideally speaking, last 2-3 quarters will be negative, and they would have just come out on a better negative or a positive result to show a sign of a turnaround. Even when you look at turnaround, you also have to look at whether this company has turned around before, or whether this company has, because we have the last 5 years of the track record of the company, the fundamental track record, whether this company has got the potential of turnaround out there. Now, obviously, what this gets you is a high reward potential. At the same time, it also gets you a high risk, because it can happen that this is a blip of a performance. So you have to be very careful when you look at the fundamental performance or the operational performance of this particular quarter, because there may be operating and non-operating items. There may be various other things that can take the the P&L up for that particular quarter, but it is actually not a strategic move, or it is not actually pertaining to a new product launch, or it is not actually pertaining to a sustainable profit growth over a period of time. We have calculated all of that. We take into consideration non-operating incomes and various other parameters that are not the operational excellence of an organization into consideration into our IP. But having said that, you still need to be careful about those particular parameters. And strategic implementations. The management implements restructuring, cost cuts, or strategic pivots. These things that happen in an organization, which can be effective on a long-term basis or may or may not work in the long-term basis. So it's very difficult to just look at a turnaround and say that this is a great company and this will now carry on. So there is a filtration process where you will have to then say that whether I'm looking at this particular turnaround, whether it can go into momentum or not, depending on the business plan, depending on the strategic play out, the pivoting that the company is doing, the cost efficiency it's coming in, whether it is paying off its debts, whether it is improving its operational efficiencies, all of those factors come in, which we anyways evaluate in our way of doing things. But having said that, this still comes with a high risk potential. The phase 2 that comes in is the momentum phase. Now let's assume that the company goes and does the turnaround and then remains in that particular phase, which is that it is typically going upwards on fundamental momentum. You will see 2-3 signs. You will see signs of trading volumes increasing. You will see obviously fundamentals improving. You will see obviously corporate earnings, positive earnings. You will see some kind of innovations coming in. You will see cost efficiencies coming in. You will see a lot of activities that will happen on stocks that are just about getting into the momentum stage. Volatility during stage is elevated because the company is now coming into a phase where there's a constant fight in between belief and non-belief, primarily because of the historical performance of the company, and hence it takes a little time for the volatility in these kind of companies to settle down, primarily because of this gap in between belief and disbelief. So you will see strong price momentum and volume. You will see increased analyst coverage. Suddenly that stock will get covered. Suddenly you'll see some DI, FI movement into that particular stock. And obviously, you will see the promoters maybe trying to buy back. You will see, institutional investors coming in. So you'll see a lot of those factors that come in on momentum stocks. The third is the reliable. Now, obviously, once the company is delivered 4, 5, 6 quarters of good earnings out there, you would typically move into a phase. You will say that this is now becoming a little predictable. There is a factor of reliability that is coming in. There are maybe consistent dividends that are coming in. At this stage, you will see volumes peaking up and you will see lower volatility in that particular stock. The price swings will be much more reliable. You will have a little bit of downside protection and you will see a steady growth, but still better than the index because you have a stock that has just come out and it has come out from the momentum zone into this particular zone. So these reliable stocks are very good if you were to make balanced portfolios with proven business models, competitive advantages, and resilience through various economic cycles that we see. They obviously attract institutional and conservative investors coming in. So turnaround to a momentum stage to a reliable, and then you have the final stage, which is what we call as the Mojo stocks, which is the top of the pinnacle. These are the top 1% stocks that we've seen. Now, obviously here, everything has to be good. So your quality over a 5-year period has to be excellent or good. You have fair amount of valuation should be fair. You should talk about, the current financial trend should be positive or very positive. And then you have technicals, which should be also be bullish in that particular one. So, but having said that, when you have all of these, the issue that happens when the stock reaches to the top 1% is that they are identified stocks. Unless you have smaller cap stocks that come in, or micro caps or mid caps that come in, some of the smaller mid caps. But these are stocks which are identified out there. So one of the things that, when I was building the product around 10 years back and I was sitting with my mentor, and most of you know who my mentor was. And I was showing him this, and I said, Mohit, and this was specifically on the institutional ratings that we had given, that if the institutional holdings are higher, we should rate the stock a little higher out of the 550 parameters that we use. And what I was told is that, what good are you doing if you are backing your research on institutional buying already? You should be the one where institutions should be buying. And that kind of stuck in my head, that instead of us trying to figure out a stock too late, can we figure out a stock early and wait for the institutions to come in, and that's when the big price advantage comes in. So we have tried a lot to identify those stocks, but I think we are getting there now. It's a long journey. We are getting there now to figure out how we can figure out these stocks early on their cycle, whether they are in the momentum cycle or reliable, then it becoming a Mojo stocks. Because as you guys know, you made a lot of money out of Mojo stocks, right? It's your darling of a stock list that we create. But having said that, if I were to figure out which are the stocks which can possibly from reliable become Mojo stocks, or which are the stocks which are in momentum can become Mojo stocks. Now let me just wait here and tell you how this journey works. Not all stocks follow this linear way of going. So ideally speaking, smaller companies, if you are a very, very aggressive investors, then you will look at a turnaround going into momentum, into reliable, and to Mojo stocks, right? That can be a 2-year, 3-year journey, but those returns will be enormous, right? I've got some examples of that. The second is that the company actually is not a turnaround company, but now it has gone into a momentum zone, right? It was not a negative financial performance company, but it was a positive, but there is a huge jump that is coming in. So although it is not moving from negative to positive, it is going from mildly positive to hugely positive, right? So that's where it's not a turnaround. It may be a it may be a positive to positive turnaround, but definitely from not negative to a positive turnaround. Under that case, the stock may enter into the momentum stage straight, and then may go into reliability if we can maintain that particular momentum, and then further go into the Mojo stocks. There are certain stocks which have displayed momentum and consistently over a period of time that are displaying momentum, which may straight go into reliable and then to Mojo stocks. So there are these various combinations. I have 5 combinations that I'm going to show you as an example today, and we will go and have a look at it. But as I told you, the question here is that, can we figure out the potential stocks that are due to enter turnaround, or that are forming up now from turnaround to enter into momentum, or reliable, or Mojo stocks. So if I'm not confusing you and trying to tell you, can I have a pre-list of turnaround, a pre-list of momentum now from turnaround, a pre-list of all of this? As soon as I create a pre-list, it becomes entry much earlier on, and we may try and address that weakness of going in a little late but a little sure out there, to a little more aggressive approach to going in a little early but compromising on a success rate, not too much, but try and figure out if we can find out of 4 stocks at least that will move into the next phase. And that's what I'm going to do next week. Let's today form up the hypothesis first. That is this hypothesis the right one that I'm making? Now, one of the things that you have to recognize is that there are life cycles. Navigating the stock's life cycle is extremely important to try and understand what is the life cycle the stock is in today, right? Whether it is going to remain in that life cycle or it is going to move to the next life cycle is where we can help you. But you have to first understand what is the life cycle that the stock is in today. So recognize the stage, identify the stock life cycle, and align it to your investment strategy. You then leverage each stage for a specific set of target returns. So you're basically saying that if I'm a very aggressive customer, I'm going to stay from maybe a turnaround to a momentum stage, and then I'm fine. I don't want to go into the reliability and the top stock stage. If you are a conservative to a moderate customer, you will say that I don't want to take the risk of a company turning around, whether it will turn around or not, or whether it has momentum, but I would look at something which is more displayed over the last 5-10 quarters, get into the reliability mode and ride the journey towards the Mojo stock mode. So you've got to stay flexible and dynamic to avoid very rigid thinking in terms of what you want out there. The job of investing is to identify the optimal risk reward opportunities that you're getting, time those entries and exits efficiently, as much as you can build diversified portfolios, recognize the inflection point and avoid the traps. Do not have a darling. I love this particular product, this is my darling. Don't have that darling. Understand what that particular product is telling you, what life cycle the company is going into. A Mojo stock is a life cycle where the stock has displayed its strength. When it has already displayed its strength, it has already created that wealth for the investors. Is there a way that I can understand Mojo stocks before that comes in? But for that, I need to understand what Mojo stocks is and what strength it displays out there, and obviously achieve long-term superior returns. Now, let's look at some examples. I'm very excited to present these 5 companies to you. I'm not here. I am again going to say the disclaimer. This is not an investment advice. This is a hypothesis that we have derived out of our analysis. We will come back to you and try and get better at this within a week's time, and that I think can be a very, very mega time for us, primarily if we can try and get in early into these particular stocks and try and create a better alpha for our investors. Now look at this stock. Now very interestingly, Jaiswal Neco Industries, which belongs to the steel industry, is a small cap. The current market price is 76.39. I have, for the sake of example, seen 5 companies that are mirroring that out of all the 5 companies that we have. So now look at this strategy performance. The stock entered hidden turnarounds on 26th of May. And it delivered a 95% return versus BSE 500 of 3.74. Immediately in June, it came into, sorry, this is, just give me 1 second. Right. So in June, it came into momentum, 30th of June, and it remained into momentum and declared a 105% return. And finally, it came into reliable on 20th of October 2025. And since that time, it has come into reliable, it's delivered a 6.57% return. So it came into hidden turnarounds, built up the momentum, went into momentum now, and then went into reliable performers. Let's look at this particular stock. Now, if I look at certain data points out here, I typically like this one card that you see out here. Specifically, if you're looking at getting in early. If you look at 1 year, the buy-sell zone that we have in terms of our ratings, it was in sell zone for 51% of the time, and it has come in buy zone for 178%, 178, which is 49% of the time. So for an aggressive approach, for turnaround approach, this is very important. If you see a stock which is, say, 80-90% on the buy zone, that means it's an identified stock out there. It is going to do well. But if you're looking at a little more high risk kind of an opportunity with a possibility of higher return, then I typically like this equal shade, or I would love the whole shade to be mostly red and just come into the green shade, because that tells me that the company is turning around. Now, if you go down, quality scorecard is average, valuation is fair, financial trend is outstanding, and technically it's bullish. Now, if you see here again, it's a very typical company that is still not a reliable company. You have quality which is average, but you have a fundamental quarter on quarter momentum that is coming in, which over a period of time will affect and improve the quality to at least a good. And if you see the technical trend, it is on the bullish side. If you look at the stock DNA, obviously iron and steel, market cap of 7,554 crores, PE of 20 versus industry PE of 28, dividend yield 0, debt to equity 0.84, return on equity of 4.65. I am more interested in looking at the recommendation section where I go and see the comparison of companies on a similar platform. You see it is one of the companies which is doing the best on the iron and steel side. Now, despite that, this is only a small cap comparison. If you come down, if you look at the sales growth over 5 years, it is 18%. If you look at the EBIT growth over 5 years, it is 45.39%. EBIT to interest at 1.69, debt to equity, debt to EBITDA is at around 3.59. All seems to be fine to me right now. The quality is obviously average, primarily because the long-term performance is not there. It ranks in terms of size. Despite it being a small company, it ranks as 17th out of 140 companies in iron and steel sector. So there is a leadership position that this company can go in. I'm not going into the details on making a business case out here because that's not the agenda. I could have done that, but today we are going in, touching the, feeling this company on an overall basis. Technical trend. Now this is where I'm very keen to look at what happened. If you look at from 2021, these are the quarterly result scores, as you know, which is the bars, and the line graph that you see is the movement out there, right? Now, if you look at somewhere here, which is in the May 2025, it would have come into the turnaround, because if you see the logic of turnaround works on minus 19, minus 11, and then it comes into 21, there is a continuous improvement that the company is doing. And as soon as turnaround is a little conservative we made, because as soon as the company comes into positive, we pick it up. We don't pick up a company at a turnaround on a negative financial performance parameter, because we still want to be a little more sure about it. So we capture it here. As soon as you have 2 quarters consistently coming in, it goes into momentum, and then it stays there in momentum for some time till it comes into the reliability factor, which is, so if you see here, you see this massive turnaround that happened, and it went into turnaround, went into momentum zone, and then it went into the reliability zone. So now when I look at this, how many such companies, and that's what I'm going to present next week, that how many such companies we can have dependability on and say that these all follow that kind of a mechanism. Let's look at one more. Krishna Foshchem Limited, obviously fertilizer industry. If you look at this, the quality is average, valuation is expensive, financial trend is outstanding, technically mildly bullish. It came into straight, it was not a turnaround contender, it came into straight momentum on 2nd of May 2025, delivered a 81% return versus the benchmark of 7.86. And it immediately then came onto reliable performers, delivering a 75% return. Let's look at what happened here. I go into recommendation. So primarily been in the buy zone. That's why it's not a turnaround. This is more on the momentum side. Sales growth 5 years of 61%, EBITDA growth of 5 years as 52%, EBIT to interest at 7.19, net debt to equity of 0.87. Now, if you come here, so what you're seeing here is the same story. If you see here, this stock, although I have not taken that point of 2023, but 23 to -5 and in +14, which is in July, it would have come as a turnaround. So it would have become, now this is not the momentum that it was seeking, right? If you look at the fundamental momentum scoring, if you're seeing 14, 24, 11, 6, 14, 8, it gained momentum towards this stage. So as soon as it got 4-quarter momentum, it came into a little bit of reliability. So it came into momentum now here in July, and then it came into the reliability factor as soon as these 4 towers started making, which is 32, 42, 35, and this thing. If you had picked up this stock here, which is at the turnaround stage, which is the price that you see, which is 219, which is July of 2023. And if you had held this stock back, because the company is not going back from being a turnaround, it is still trying to build up that fundamental momentum. Still, in 3 years' time, you would have doubled up, or more than doubled up, actually, your investment. So the only thing that we have to see here when we are looking at this kind of an opportunity, which is turnaround to opportunity where the momentum is building up, is that you don't get out during this particular momentum unless the stock goes back into a reverse turnaround stage. If it goes back into a reverse turnaround stage, fundamental turnaround, then that's a different case. But despite it going and stabilizing, you see how the last 4 quarters have played out on this particular stock, and that is something that is showing you. Now, if I were to run this strategy on a turnaround and show you in 2023, I've taken the current list itself. But if I were to go back and take my full list, this stock would have been in turnaround and then remained out there, because we don't get out of a turnaround stock unless it goes back on the negative side. So in turnaround itself, this stock would have generated almost 125% kind of a return over a 3-year period. Let's look at whether we have another one of this example. Madhya Bharat Agro Products, 70 by small cap into fertilizer industry. If you look at this stock, came into momentum now on 17th of Jan 2025, and it came into reliable performance on 11th of July 2025. Obviously in momentum now, when it came and delivered a 48%, and in reliable it is still not delivered, it is a 3.8% return. Let's look at this stock. Yeah. I'm also going to look at total returns. I should have showed you the last time as well. This gives me the, I love this one graph because it tells me the sector versus stock on a performance on a long-term basis. So if I were to look at 1 year, the purple line that you see is the stock, the blue line that you see is the sector. The sector, obviously, in a 1 year, the stock is up by around 73%, sector is up by around 8.51%. So if you look at it, you can clearly see a gap out there. Once I see this, I would then go and try and figure out what's happening on the return quartiles on 3 months, 6 months, 1 year. Most apart from the last 6 months where the stock has suffered a little, the stock has done very well on a very long period of time. Let's look at the recommendation section. A lot of other alternatives available, but wherever you go, the quality is average or below average. It has been in sell zone and came only 5%, but otherwise it has been in the buy zone through the year for us. Quality is average. 5-year sales growth is at 53%. EBIT growth 5 years 35.9%. And all the factors remain fine. If I come down, P of 40. Now again, if I were to create this particular, if you look at this particular stock, which is -3, -4, if I were to put the turnaround, it would have been in the turnaround stage in Jan 2025. And it would have remained there at a price of around, say, 272, which is currently around 409. So if I were to play around this particular turnaround that has happened. Now, classically, if you see here, this gives me a lot of confidence because the company had turned around in the past. So there is a clear sign that the company has gone into some kind of an issue out here. You can look at the verdict report to see what those issues can be. But if you look at whether the company is reviving again, it is clearly showing you a trend that it is reviving again. Now, the issue is that can I catch the company here and see if the company is now moving in between into a momentum stage? That is the presentation that I'm going to do the next time, and also talk about what stocks we're looking at there. But let's look at one more example. Apex Frozen Foods, this is from the seafood industry, FMCG. Current market price of 286. Again, if you look at this, 30th of May 2025 came into turnaround, and after turning around created momentum and went into momentum now on 10th of September 25. Returns 22% when it came into turnaround, and momentum now at a 12.64%. So it's a 6-month story out here. Let's look at Apex. If you look at Apex here, very small company. Be very careful on this one because this is a very, very small company that we're talking about here. I'm taking this as an example primarily because it is following the same trend. Let's look at the recommendation first before we look at this. So if you see here, 48% on the sell zone, and then it has come in the fundamental buy zone for 52%, current score of 74. And if I were to look at what is the story here, that's where you see the turnaround building up here somewhere in the month of May, June, when the results came out. And that's where you see 3 quarters of performance already out, and the company is on a possible momentum zone, not much of a correction. If you see from 332 to 280, but if you have one more quarter of good results, this company can perform better. But if you see, if you were to get it at the turnaround stage itself from 233, you would have made a decent return. As I said, small company. Let's look at one more company. Now, this has been, obviously you know about this Bombay Stock Exchange. It's a mid-cap, 77. Current market price of 2,684.80 as of day before yesterday's close. You have 2 strategies that this has come in, which is reliable performer. It came in November of 2023, and it became a Mojo stock somewhere around 10 months hence in August of 2024. So this has also followed the same pattern that we've seen. Since a part of reliable performer, the stock has done 247.40% return versus BSE 500 of 36%. And since the time it came into Mojo stocks, it actually has done 190% return versus BSE 500 of 0.26% return. Quality excellent, valuation very expensive, financial trend very positive, and technically on a mildly bullish zone. Let's look at BSE. let me go and look at the. Again, this stock is a turnaround story out here. Minus 16, minus 8 would have got captured here itself. From here, obviously there is a momentum somewhere here. We picked up the stock, and you see that as the momentum is built and it went into reliable and then came into the Mojo stocks parameter. So this is something, this particular journey where you see the last 4-5 quarters is the reliable and the Mojo stock journey. The journey before that you see here is the momentum journey, and the journey prior to that is the turnaround journey. Now, as I said, that not all companies follow this. Some companies follow it, which become typically multi-baggers, but you can capture companies at various stages depending on what stage of the market is and what stage of the evolution the company itself is in, to figure out what kind of investment risk that you want to take and what kind of return you want to take. Ideally speaking, let us now next week look at also what kind of risk you are running here in this particular stage, what kind of risk you are running in the momentum stage, and what kind of risk you are running on reliable, obviously, and Mojo stocks, which is our two top of the line opportunities that you look at on a more, I would say, a better chance of success than the turnaround stocks out there. So if I today were to just go and look at what's happening on hidden turnarounds and how bad have they gone, right? Let's look at how bad have they gone. This is the current list that we've got. So we've got a little bad out here, but the bad is not, frankly, in these kind of markets, the bad is not bad at all. If you look at, our worst has been minus 14%. And mostly the worst has been in negative, less than single digit negatives. But if you look at the positives are quite higher as well. If you look at, let's filter it on date of entry. If I were to look at date of entry, the recency, only the recent ones, which is the last 2-3 months that you've seen out here, which are typically sitting in the negatives, right? So you've given it, because they have just turned around. The reason you have to look at date of entry out here is that because this is the September quarter results. So because of the September quarter results, they have turned around and they've come out there. But, you have to look at one more quarter to try and see whether they were actually a turnaround story or a blip story. So I'm not worried about anything that comes a quarter to the next quarter results, because that's where the stock stabilizes typically if it's in the turnaround stage. Having said that, let's look at the full list and see what happened across. Right. Now, if you look at the full list, I'm actually quite impressed. Even if I were to go to show more, I think we are missing something very big out here as investors. The reason I'm saying that is because I can see the traffic on this page, hardly any traffic. You guys are not going here, because if you're seriously an investor and if you're looking at, and most of you tell me that you're aggressive investors, then you cannot be missing out a turnaround story out there if you're an aggressive investor. But if you're looking at this, let me see the most negative out here. The most negative is a 44%, 46%, right? And the calls are very limited out here for that. But if you look at the range on the positive, it goes to even 60, 70, 80, 90, 100, 120, 200, 300, and even 700%, 500%, 700%. So I think there is a clean hypothesis out here. Let's just look at momentum now and see how that has done. If I look at momentum now, and again, look at my current list, this is the current list. So you've got 104, 85, 79, 62 versus index not anywhere. And if you see the negative, there's only just 3-4 stocks that are in negative. In these market scenario, trust me, that's a huge thing, primarily because, you've seen the small cap index been down by around 9 to 12%. You've seen mid cap down by around 3.54%. And you've seen only the broader index, which is Sensex, up by around 3%. So looking at that, and these are very selective times in the market where a part of the index is moving, your advanced decline ratio is pathetic as of right now. So if you look at this, catching the momentum, is it doing a good job? The answer is absolutely. But if you look at now the date of entry, and let's look at the latest ones, right? These have just come in. GE Power, SG Infra, Freedom Pharma, Gujarat Natural Resources. I can go into each and every stock and try and figure out what stage of the company it is in. But these are excellent opportunities if you were to see which is 5 days, 7 days, 11 days, 21 days old. They have just come into movement. Now let's look at one of this, HEG. Let's look at what's happening here. Now look at this. It's from a turnaround, it's getting into a momentum stage. Right? Good catch. The answer is absolutely. Why not? Because if you look at here, the stock has stayed stable during negative stage. So there's a lot of investor confidence that is showing me out here. It's not a company where the confidence is not, but the stock is just coming in this stage. So, looking at where the markets are today and how pressured the markets are, can this be a story? The answer is yes. We'll have to just dig deeper into this and find out. If you look at quality average valuation is on 40, industry P is 43, price to book of 2.23, which is frankly quite good. Let's just look at the total returns. Let's look at a 1 year versus the sector. Very similar to the sector, mirroring the sector on a almost a year basis. Little better than the sector. 10-year basis. Yeah, mostly outperforming the sector. Let's look at so you have decent amount of FI and DI holding. Promoters is decent, which is 55%. So anyways, now let me just show you quickly reliable. That's when the momentum stage is passed. Now the reliability stage out here, again, if you see, the returns have gone from that 700, 500% to more sustainable, numbers out there. And the drawdowns are quite curtailed out here as well. Let's look at the full list. Right, so you have a 500 Loris Lab, which is Lloyd's Engineering, Cosmo First, but otherwise you see it's a pretty decent kind of a return, but it is also in a reliability stage. So you have to understand that it goes into that stage after passing through various stages out there. And predominantly you will see this list as a positive list because the company is fundamentally in a very good zone. And lastly, obviously, the top stocks, which is Mojo stocks. And if I were to look at here with the same hypothesis, the full list. Now again, if you see, this is a, I don't know how much of return would have got lost before 491% in a Mastec or in a Saregama although Saregama we got in quite early, Loris Lab and all this stuff. But again, this is, so, this whole journey, if I can combine these numbers, the thing that happens is if I can combine these numbers, then the fun starts. So that can we get in early before it comes into Mojo, or can we get early before it gets into Reliable? And that is going to be my effort in the next week. And hopefully if that works, then I think we may create a pre-list for stocks to go in that stage. I know I've taken a lot of your time. I'll quickly wrap up because this plan is getting over today. The US plan will end today. This plan is 19,999. You're getting for 1 year of US product, but because of Christmas and New Year's, we are giving 4 years free. So you're getting 5 years of full access. 1 year price you're paying and you're getting 5 years of full access out here with the link that is given out here. This will end tonight. The India and US pack, for 1 year you're paying 19,999, but you're getting 2 years absolutely free for all of India and all of US. And the one that is, and just an India pack, You go 14,999, you get 2 years free with that. So this is a price for 3 years, 14,999. All these three offers are one of the lowest offers that we've actually the lowest offer, especially the US only offer is the absolute low offer that we've done. That's the reason we are ending it. We have very few slots available. In case you want to extend, please make sure you extend multiple times. You don't extend once, because you can, then become a 6-year or a 9-year member like this. These offers are not available on the site. They're only available with the link down. Please make sure that you would have accessed it. So with that note, let's get on to the Q&A. I know I've taken a lot of time, but let's pick up some questions.
Okay, I'll start off with this first question. This is by Rao. Good evening, Moji. Are you still betting on your earlier view of 25 is equal to 5?
Absolutely, sir. I'm betting, and the markets are showing that I'm betting right? If you look at the markets, you will see a little bit of a surge coming in. I'm absolutely betting on that.
Okay. This next question by Rajiv Pal. Hi Mohit, thanks for sharing your theory, which is truly interesting. I have a small point. Both stocks, Krishna Foskam and Madhya Bharat Agro, have been in the buy zone for over 90% of last year, which means these two scripts have also identified stocks.
Yeah.
So they may also have a run up quite a bit, right?
Yeah, but even when you identify a stock, right? So you may identify a stock, but the momentum is not coming in that. So it will not come into momentum till the time the stock is lackluster out there on financial performance and quarter-on-quarter performance. Only when it comes into a escalating financial performance. So to make it simplified, only if the CFD score starts moving up, that's when the momentum now catches it, and also if there's a price momentum along with that. So that's when the momentum now catches it. So if you have a up and down, consistent, sideways kind of a fundamental performance or financial performance on Q-on-Q basis, it will not come into momentum now. Only if you have escalating fundamental performance will come, and that also can be very highly rewarding. So you have to look at catching a stock at an early stage out there. Now turnaround may not be the only way, because there's a lot of companies, as I told you, I have still not included positive to positive turnaround in fundamentals. I'm looking at negative to positive turnarounds, right? There are stocks which may be in positive to positive turnaround. To give you an example, CFT score of +6, CFT score of +14, CFT score of +34. Now this also can be a big positive to positive turnaround, right? So momentum now will be able to catch that, and it will remain out there. But if that consistency is not coming in, it will not come into reliable. So your point is absolutely valid. If you are looking from turnaround to that, so that whole red and green bar should be biased for turnaround ones. That's when you're catching it at a turnaround stage. But if it is primarily in a buy zone, that means that it is either in the momentum zone, it has come in the momentum zone, it can burst out. If it is in a long-term buy zone out there. And it can become a contender for reliable and then for Mojo stocks as well.
Okay, moving to this next question. This is by M. Putankar. Do you consider management commentary in evaluation of turnaround stocks?
No, sir. We don't consider management commentary. Which management has given a negative commentary? Tell me. So I will be very straightforward with you. I have heard thousands of management commentaries. I don't think so any management has given you a negative commentary on themselves. So our management commentaries are always bullish. We look at fundamental results, because that is the tire on the road. We look at how we can identify companies with certain other parameters that can give us more a view on how the stock is doing, which is, we look at dividend payout ratios, we look at institutional holdings, we look at volume trends. There's a lot of market trends and price trends that will tell me much better than the management commentary. We don't look at management commentaries.
Okay, I'll pick this next question by Sarang. Sir, as few retail investors might want to diversify some part of their portfolio outside India, global mutual funds should be a great option for beginners. I saw most of the global mutual funds are unrated on the platform. Could you please take the suggestion to rate mutual funds that have global exposure as well, and also suggest few based on their ranks if possible?
Absolutely, Sarang. I think valid point. I'll take this up. We will have this sorted out. Your point is absolutely valid. We will look at this, and we have the fundamental strength of now evaluating the stocks within the holding of these mutual funds as well, which is what we use as our rating mechanism for all the funds in India. We'll surely take this up and get it implemented on global stocks as well. Just give me a little time on this. I can tell you that maybe in a quarter's time we should be having this ready.
Okay, we've got this request by Mr. Ram and a few of the investors. He's asking that if he can buy and gift the 1+4 year free for his son for the USA plan.
Absolutely. According to me, Ramji, that would be one of the best gifts that you would have given your son. Well worth in just about $200. At 19,999, getting a 5-year excess of US is unimaginable. We've never done that, and as I said that we are going to end it because we've got a huge response on that. And I think we've kind of shot ourselves on the foot by giving it too cheap. So if you want to gift it, you want to extend it yourself, please do so.
I'll pick this next question by Bangaria. Boji, the data analysis is good, but what you're showing is returns which are unrealized gains. But actually, we want the recommendation from the time of exit. Instead of unrealized gains, you should actually show realized gains.
No, so list is got, wherever I've shown you the returns, when it moves out of the list, I show you the realized gain. So, but it is not realized gain in a way because it may remain in a list and then move into another list. So, for example, if a stock is in a turnaround, then moves into momentum now. So, when we leave a stock in a particular list, we don't call it as an exit. We say that move from one list to the other list or moved out of the list. So, if it moves completely out of the list, we consider as moving out. So, for example, in Mojo stocks, the returns that I've shown you is from the date it entered and from the date it exited the Mojo stocks. That is realized for us. So, date of entry and date of exit and point to point, what was the return that the stock created. So, wherever we do the return calculation, we always do point of entry and point of exit. Right? So, that is always the case. So, for us, that definition itself is realized. Now, obviously, you may have not entered at that price and not exited it. All of that is different because that only on the portfolio analyzer we can figure out. But on the stock list, all the returns that you see of the full list are date of entry and date of exit. That is the returns it shows.
Okay, this next question, this is by Kaushik. All the stocks that appear in the scanner, should one buy all of those stocks?
No, I am not here to recommend you to buy a single stock, sir. I am just trying to tell you that, sorry, Jason, am I interrupting you?
The question is like, how does one shortlist a max of, let's say, 10 to 15? What should be the frequency of rebalancing those as well?
See, if you want to shortlist, then buy the early discovery portfolio of Mojo Infinity. That's where we shortlist the 10 stocks. This is for investors who want to build their own portfolio. So, I'm helping those investors look at stocks in a specific way. But if you say that give me 10 stocks, then I would say that why don't you invest in the Infinity portfolio, which is a Mojo early discovery portfolio, which exactly picks up 10 stocks from these 4 strategies, right? So you can do that. That's the best way, hassle-free way, where you don't decide and we'll decide and tell you, and you have to just execute. So that's a better way. Here, our job is always to try and figure out how we can catch trends early, stocks early. That is where we do this. And this is for more investors who want to take their own calls. As I said, that I don't know you as a KYC, which means that I don't know you. I don't know your risk profile. I don't know you as an investor. I don't know you as what's your asset liability mix. And hence there is no recommendation that we ever give on a stock. Never on any of the webinars. We only talk about stocks that are looking interesting, trends that we are catching here and there, so that we can talk to you about the trends. But MarketsMojo over the last 6 years never come and told you to buy a stock. That is not what we do. We say these are our top stocks. We lay our facts down. These are stocks that are turning around. These are stocks which are going into the momentum zone. Who you are as an investor and at what stage, what kind of risk you want to take, that's something that is completely on the research platform.
Okay, I'll pick this next question by Sushovan. He says he's a proud subscriber of MarketsMojo. He has a suggestion. if you could predefine the number of maximum stocks in each category so that we can allocate separate money for it.
Sorry, say that again.
Yeah, he's asking that if you could predefine the number of maximum stocks which could be eligible for each strategy, let's say maximum stocks for Mojo stocks, hidden turnaround, reliable performer, so that he can allocate separate money for each of the stock.
Sir, we are looking at the whole market. Would you like to lose an opportunity where I allocate only 10 stocks and there are maybe 20 stocks that are looking good? I don't know if you would want to do that. Although, see, what you're all trying to do is trying to make a portfolio of a list. You can't make a portfolio of a list. It is something that you either go as a self-managed approach where you say that okay, these are the top stocks that are coming in. Now, typically, I've shown you one approach, which is that journey approach that I've seen in a stock. I have shown you 4 or 5 screens on which I have gone and checked out the journey of the stock. I have not gotten into the fundamental dissecting of that particular company, right? But you can do that as well because of downloading the verdict report, which is a 20-page report. But I have just shown you certain journeys that you want to take. Now, if I want to take a conservative journey, I'll say that okay, I'll look at reliable before it becomes Mojo stocks, which are the stocks that are there in reliable that are coming up, right? When I go there, then I look at the fundamental trend of a reliable stock. It's doing great. What is the sector? Whether the sector is doing good, whether it is doing better than the sector. I've just given you 5 things on the thumb to just do a base analysis. I can actually, if you guys want, I can actually give you a session of 1 hour on how to evaluate one company. So I can do that as well if you want. But once you have that, then the decision is yours because we'll say that there are 30 companies turning around today. Now, how can I tell you there are only 10 companies, actually 30 companies that are turning around, right? The reason you are in a dilemma, Mr. Gauri, is because you want to make a portfolio out of it. And I'm requesting you that if you want to make a portfolio out of it, then please take the early discovery portfolio because that's where we do it. We have the whole science of doing that whole particular piece. But do not, for the sake of making a portfolio of 8-10 stocks, don't lose the other 20-30 stocks because they are also maybe turnaround stocks or momentum now or whatever strategy.
Okay, Mojo, getting a lot of questions about the US stocks. So some of the investors are actually asking what exactly do you cover in the US market, and also how could we go about investing in the US market?
Going about investing, a lot of brokers have had tie-ups with the international brokers now. So you can check with your broker. A lot of brokers, like I was meeting up with, for example, Motilal Oswal, they're also getting a tie-up done with somebody who can deal in US stocks. So you obviously have to go through a broker. But now the good thing is that all the Indian brokers are now having tie-ups with international brokers through which they can do the whole transaction for you. What's covered in the US pack is there are around 7,500 odd listed stocks. We do research on all 7,500 listed stocks. You have a score just the way that you have in India. You have the same strategies, which is a turnaround in US, Mojo stocks, reliable and momentum now strategies out there. You also have a stock of the week strategy out there. And you have, I think, if I'm not wrong, around 5 model portfolios that we do in the US. So you can subscribe to a model portfolio, tell the broker to get that executed. And obviously, we come to you with the advice on when to get out of a stock or when to not across that model portfolio. So you get the whole platform. You have the verdict report, you have the switcher report, everything that you have on MarketsMojo India is available for MarketsMojo US as well.
Okay, well, that's it with the Q&A session for today.
All right. I hope you enjoyed this session. Please keep giving us feedback so that we can keep improving these sessions. It's been 6 years. We still want to do a good job, a better job every single webinar that we do with you. Thank you, and I will see you soon.